Hi students, I am Prakash, Chartered Accountant and acting as academic advisor in Masterminds from the past 20 years. Here is a short video introducing matchless Masterminds briefly for the convenience of the students who came to this channel for the first time. Masterminds was established in the year 2002 and has been acting as a reliable platform to offer coaching for CA and CMA courses. Masterminds is undeniably the pioneer and the leader in MEC, CEC, CA and CMA courses with nearly 20,000 admissions per annum. This is an incredible initiative by three edupreneurs, namely Mohan, Radha and Prakash, that is me. All three qualified CA at a very young age of 21 years and started this organization under the mentorship of my father, Mr. M. Siv Prasad Garu. So Mr. Mohan is my brother and Radha is my sister-in-law. And by the way, it's me, Prakash, Chartered Accountant. So here are the courses for which we offer the coaching. We offer coaching for MEC, CEC groups exclusively at intermediate level. And we also offer integrated coaching for MEC along with CA, CMA Foundation. And we also take exclusive admissions for CA, CMA Foundation or CA, CMA Inter. And we also offer coaching for CA, CMA final level as well. Recently, we have started a unique academic program at intermediate level, that is MEC Pro, aiming for the students who want to pursue BBA or MBA or CLAT courses in future rather than CA or CMA, and we have received a huge applause for the same. So 20 years of experience, and we have finished more than 155 batches of CA or CMA Inter in Guntur alone and similar number of batches in all our branches together. So till now completed 17 batches of CMA Inter and 18th batch is going on. Successfully completed 25 batches of CA final till now and 26th batch is running now, and we have also successfully completed 4 CA or CMA final batches in Hyderabad. So till now our students are able to achieve 990 All India ranks at various levels of CA, CMA courses, and our students are able to achieve first rank for 48 times in various courses for which we offer coaching. So in a single year, our students are able to achieve 3 All India first ranks in the year 2020, and till now our students are able to achieve state first rank at MEC intermediate level for 18 times, that too 8 times in a row. In a single attempt, our students are able to grab 98 All India ranks at CMA Inter and final results of January 2021 and our All India ranks in February 2022 CA results. And here are the 10 All India ranks in CA final results of 2021 alone. And till now, our students are able to secure 93 All India ranks at IPCCR CA Inter level in the last 9 years. And here is our physical presence: Guntur, Vijayawada, Hyderabad, Amirpet, Dilshuk Nagar, Vizag, Tirupati, Kurnool and Rajahmundry. And here are the locations where we have branches. And here are the contact numbers. Here is the list of our physical presence and here is the list of our online presence. And for your kind information, we don't have branches in any other locations other than stated here. So please do install our Android app Masterminds Online Classes from Google Play Store, and if you belong to iOS platform, then install an app called Class Plus from Apple Store and enter the organization code as MZGUN. In this app, you can find a large number of useful content like regular batch videos, crash batch videos, rapid revision batches, guidance classes, motivational videos, amendment videos, Masterminds test series, whatnot. Large amount of useful content is already available in the app. In our app, you can find a section called study material where large amount of free content is also available. Until now, more than 24,000 students have already downloaded our app and we are nearing to 25,000. Sir, is it possible to interact with the directors directly? Yes. If it is an administrative issue, you need to contact Mr. Mohan sir on this mail ID. If it is academic issue, you need to contact me on this mail ID. So thanks to all our students who are our true brand ambassadors and who helped us to reach this position. All the best.
In this video, we'll discuss the RTP for May 2022 attempt. So this RTP consists of two parts. Part 1 is amendments and part 2 is the questions for practice. Okay, part 2 is question and answers for practice and part 1 is the amendment. Okay, so first we'll discuss the amendments. So there are hardly 2 or 3 amendments are there. First we'll discuss this first attempt. So this amendment is relating to change in time limit for rectification of name, change in time limit for rectification of name. Okay, right. So what is the earlier time limit and what is the current time limit? So first we'll see what is the concept. So the amendment is relating to section 16. So rectification of name section 16. The amendment happened with respect to rectification of name section 16. Okay, look at this. Look at this, rectification of name section 16. Amendment happened with respect to rectification of name section 16. Rectification of name section 16. What is the existing provisions? So what is the existing provision? What is the amended provision? I'll write both. What is the existing provision and what is the amended provision? Okay, existing provision. Okay, right, amended provision. Just only time limit has been amended. Amended provision. So existing provision in case of infringement of trademark. In case of infringement of trademark. In case of infringement of trademark, the company shall rectify its name. The company shall rectify its name within 6 months of receiving order from the central government. Receiving order from the central government. So this is the point. In case of infringement of trademark, the company shall rectify its name within 6 months of receiving the order from the central government. This is 6 months. So now it has changed to 3 months. That's the only point. Because to keep it on par with the other cases. So normally in other than infringement of cases it is 3 months only. Only for infringement of cases it is for 6 months. Maybe government thought that to bring the provision into provision it on par with other another provisions, they have made it as a 3 months. That's it. Okay, that is the only amendment now. Okay, this is the amendment. So existing provision is that, so within 6 months of central government order we have to rectify the name. Amended provision, within 3 months we have to rectify the name. This is rectification of name. This is one amendment. Another amendment is that consequence of failure to comply with the government order relating to rectification. So this is a newly inserted provision. So newly inserted provision, consequences of failure. Consequences of failure to comply with central government order relating to rectification. So, okay, consequence of failure to comply with central government order relating to rectification. Section 16 subsection 3, newly inserted section, old law. Okay, it is a newly inserted section. So section 16 the following subsections for subsection 3, the following subsection shall be substituted. Earlier if the company is unable to comply with the central government order, earlier this was a penalty. Now this is the penalty. Consequence of failure to comply with the central government order. Right. So existing provision and amended provision. So what is the existing provision? Consequence of failure to comply, just penalty. Penalty has to be paid. Company has to pay penalty of 1000 rupees for every day and directors has to pay penalty up to 1 lakh. Okay. So company has to pay penalty. This is the existing provision. This is the existing provision. Company shall pay penalty of rupees 1000 per day. Company shall pay penalty of rupees 1000 per day. Rupees 1000 per day. Existing penalty of rupees 1000 per day. Okay, officers in default shall pay penalty up to 1 lakh. Officers in default. Okay, officers in default shall pay penalty up to rupees 1 lakh. Up to rupees 1 lakh. Okay, officers in default shall pay penalty up to rupees 1 lakh. This is the existing provision. Now, what is the amended provision? So, if this is the case, what happens is that every company will rub off its hand just by paying the penalty. So, therefore, you no need to comply with the central government order. That means you have a freedom to infringe the trademark at a meager cost of 1000 rupees. Okay, at a meager cost of 1000 rupees per day, you can completely infringe the brand name of Infosys or TCS or Reliance, etc., which is completely not acceptable. So, therefore, what the government has thought is that this penalty is not appropriate. This penalty is not something which prevents the company to infringe the trademark. Every company will prefer to infringe the trademark and just by paying the penalty of 1000 rupees. So, therefore, what the government has thought that this is not a severe punishment to prevent the infringement of trademark. So, therefore, government has thought of this new provision. Okay, so as per the new provision, the central government itself will allot a new name to the company. So, central government will allot a new name to the company. So, as per the amended provision, central government will allot new name to the company. Central government will allot a new name to the company. Registrar shall enter the new name and issue a fresh certificate of incorporation. Registrar shall enter new name in the register. Registrar shall enter new name in the register. Next, a registrar shall issue a fresh certificate of incorporation. Registrar shall issue a fresh certificate of incorporation. So, that means ad hoc on an ad hoc basis or a arbitrary basis, central government may allot a new name to the company, but the company may not be acceptable to this new name. Therefore, government has given a freedom to the company to change the name. Look at this. Okay, so company may subsequently change its name in accordance with section 13. Okay, company may change its name subsequently. Okay, in accordance with under section 13. Okay, this is what the provision. So, what is the existing provision? Just penalty. Therefore, no company will worry about paying the penalty. It's just 1000 rupees for using the brand name of another person. Legally, if you want to use the brand name, you have to pay crores of rupees as a royalty. But when the government says if you infringe the trademark of some other company, you have to pay penalty of rupees 1000 per day, then every company will prefer to copy the name of another company. So, therefore, it is not the correct thing. It is not a severe thing which prevents the company. So, therefore, central government will allot a new name to the company. Okay. Right. So, this is what the point. Time limit to rectify. I think I have to put this above. Time limit to rectify the name in case of infringement of trademark. In case of infringement of trademark, these are the two provisions. Okay, these are the two provisions. So, both are in section 16 only. Rectification of name. One is related to time limit, another one is relating to consequence of failure to comply with the government order. Okay, right. Now, this is the first amendment. Next, second amendment, I think it is relating to dividends chapter. Okay, dividends chapter, declaration and payment of dividend. The central government has amended the Investor Education and Protection Fund Authority rules through this point. I think this rules has not been there in the syllabus, just they have given the amendment. The accounting, audit and transfer and refund of rules. Okay, right. So, they are talking about rule 3, right? Yeah, rule 3, sub rule 2, class F. So, what is the rule 3? Fund. So, the authority shall administer the fund, there shall be credited to the fund. Yes, it is there. It's not out of syllabus, it is there. What are the amounts which are to be credited to the IEPF? They have inserted this point. All shares held by the authority as per section 90, subsection 9 of the Act, and all the resultant benefits arising out of such shares. So, this section 90 is relating to a significant beneficial ownership. Section 90 is relating to significant beneficial ownership. It's a newly inserted provision. So, what is this point? Actually, basis amounts to be credited to IEPF account. That is what we are learning now. Amounts to be credited to IEPF in Investor Education and Protection Fund. Okay, Investor Education and Protection Fund. This is rule 3, sub rule 2. We are talking about rule 3, sub rule 2. Okay, all shares Okay, this is what the amendment. All shares held by the IEPF authority. 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 Authority in the sense here, the authority which manages IEPF. Okay, IEPF under section 90 subsection 9. Under section 90 subsection 9. Under section 90 subsection 9. Okay, and all the resulting benefits arising out of such shares without any restrictions. So if any person fails to declare his beneficial interest, if any person fails to declare his beneficial interest, then such shares will be transferred to the IEPF. So to better understand this provision, first we have to read the in our material we have to read the membership chapter. Okay, in order to understand this point, we have to read the membership chapter. As per the ICAI curriculum, it was in the dividends chapter. It was in the dividends chapter. Okay, but to understand this provision, first we have to see what is section 90 subsection 9. It is covered in our membership chapter relating to beneficial interest. Relating to beneficial interest, I will show you that provision, because without that provision, you will not be able to understand the what exactly the amendment stands for. 90 subsection 9. Okay, look at this. The company and any person aggrieved by the order of the tribunal may make an application to the tribunal for relaxation or lifting of the restrictions within a period of 1 year from the date of transfer. If no such application has been filed within a period of 1 year from the date of order, okay, such shares shall be transferred to the IEPF. Such shares shall be transferred to the IEPF. So if the company does not make any application, make any application to the tribunal, then within 1 year from the date of order, the shares will be transferred to the IEPF. Okay, look at this. First you have to understand this point. Look at the subsection 7. Where any person fails to give information to the company, the company may apply to the tribunal within a period of 15 days of the expiry of the period. So before that, first we have to see what is the duties of the company. What is the duties of the company? Every individual who is holding every significant beneficial owner shall make a declaration to the company. So first point, every significant beneficial owner. Okay, so in order to understand that point, first we have to understand the background. So what is section 90 subsection 9? Okay, without that you will not be able to understand this amendment. Okay, section 90. Okay, section 90. Every person holding significant beneficial ownership in the company, every significant beneficial owner shall file a declaration to the company. Every significant beneficial owner shall file a declaration to the company. Okay. Every significant beneficial owner shall file a declaration with the company. And company also can issue notice to the persons. Every company shall file a, look at this point, a company shall give notice to the person, to a significant beneficial owner to disclose his interest. Okay, every company may disclose, every company shall give a notice. Every company shall give a notice to the significant beneficial owner. So every significant beneficial owner shall file a declaration with the company. If significant beneficial owner fails to file a declaration, fails to respond to the company's notice, then the company may apply to the tribunal. So after hearing the parties, tribunal may pass an order. What is the tribunal's order? Tribunal may pass an order restricting the rights attached with the shares with respect to which the declaration has not been filed. Restricting the rights attached to the shares with respect to which with respect to which declaration no response is submitted. No response is submitted by significant beneficial owner. Okay, right. So any person aggrieved by order of the tribunal, any person aggrieved by the order of tribunal, tribunal shall may apply may appeal may appeal to the tribunal within 1 year. Any person may make an application to the tribunal for lifting the restrictions. Any person aggrieved by the order of tribunal may apply to the tribunal to lift the restrictions, to lift or ease the restriction, to lift or remove the restrictions, to remove the restrictions. If no such application is filed within 1 year, if no such appeal is filed, if no such application is filed to the tribunal, for requesting lifting of restrictions, okay, within 1 year of passing the order in this regard, within 1 year of passing the order, then the shares, so then the shares on which restrictions are imposed, till now will be transferred to, shall be transferred to IEPF, without any restrictions. And once the shares are transferred to IEPF, so IEPF, all those restrictions will be removed. All those restrictions cease to exist, and IEPF can hold the shares without any restrictions. So by just looking at the two lines, you may not be able to understand. We have to go through the theory, what exactly that stands for. So all shares held by the IEPF authority shall be transferred to the IEPF fund. Okay, this is what the point. Every company shall give a notice to the significant beneficial owner. Every company shall give a notice to the significant beneficial owner. Every company shall give a notice to the significant beneficial owner, and every significant beneficial owner shall file a declaration with the company disclosing his beneficial interest. So if he fails to respond to the notice, then the company may apply to the tribunal. Tribunal may pass an order putting some restrictions on the shares, and tribunal will give 1 year time to see whether the persons on whom we impose the restrictions, whether they will come and request the tribunal to lift those restrictions. No, in spite of tribunal imposing the restrictions, they are not responding to that. For a period of 1 year. So therefore, after 1 year, those shares will be transferred to the IEPF. But when the shares are transferred to the IEPF, they don't carry any restrictions. So long as the shares are held by the IEPF, there is no restrictions on the company. There are no restrictions on the shares. Okay, right. That is what this amendment. No, second amendment. So first amendment is relating to rectification of name. First amendment is relating to rectification of name. Second amendment is relating to amounts to be credited to IEPF. First amendment is related to rectification of name. Second amendment is related to amounts to be credited to IEPF. And next, third amendment. So third amendment is related to CSR activities. Third amendment is related to eligible CSR activities. 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 Third amendment is related to eligible CSR activities. Okay, right. So what are the eligible CSR activities? Already the government has given certain list relating to COVID vaccine development. So now we are adding few more things. Okay, right. So now it is further clarified that spending of CSR funds for creating health infrastructure for COVID care, establishment of medical oxygen generation storage plants, manufacturing and supply of oxygen concentrators, ventilators, cylinders and other equipment for countering COVID-19 are eligible CSR activities. So this is the new amendment. As per the MCA clarification, MCA clarification relating to section 135. MCA clarification relating to section 135. Spending of funds. Okay, spending of funds for creating healthcare infrastructure for COVID care, Okay, establishment of medical oxygen, establishment of spending of CSR funds for these activities. For these activities, look at this. I'll give the activities which have been covered here. Creating healthcare infrastructure for COVID care. Next, establishment of medical oxygen generation and storage plants, manufacturing and supply of oxygen concentrators, ventilators, cylinders, and other equipment for countering COVID-19 or other similar activities. For COVID-19 or other similar such similar activities or eligible CSR activities or such similar activities similar to that, or activities similar to above, activities similar to above, or eligible CSR activities. This is the first thing. This is the first clarification, spending of CSR funds. One more clarification is there that I'll come to know. Okay, this is the first thing. Spending of funds for these activities are treated as CSR activities. Spending of funds for these activities are created. No. Now look at the second point. Okay, reference is, this is the point. Next. Right. So it classifies spending of CSR funds for COVID-19 vaccination of persons other than employees and their families is an eligible CSR activity. Okay, this is what the point. Eligible CSR activity. Spending of funds. Okay, spending of funds for sorry, this I think same has been copied. This I have to copy. Spending of CSR funds for COVID vaccination for persons other than employees and their families is also eligible CSR activity. Till now that exemption is relating to eligible at CSR activity. Okay, right. So now that has been extended to persons other than employees. So these are the three amendments given. These are the three amendments applicable for May 2022 attempt. So I can write amendments applicable for May 2022 attempt. Okay. Amendments applicable for May 2022. There are three amendments. First one is relating to rectification of name. Okay. I hope everybody understand those 2 points. Next, second one is relating to this thing, amounts to be credited to IEPF. This is bit critical thing. The amendment looks to be 2 lines, but to understand the 2 lines, we need to have this background, what's going on there. Otherwise, you cannot understand those 2 lines. Next, the third is very straightforward things. Any spending of funds relating to COVID is treated as an eligible CSR activity, maybe including other persons also. Need not be employees of the company. Even if you spend funds on other persons other than your employees, still it is counted as a CSR activity. Okay, right. So these are the amendments. Now we'll go to the questions. We'll look at the questions. So part 2, question and answers for practice. So within the part 2, division A relating to case scenario or multiple choice questions. So first we have to read the case law. So what I'll suggest is that if the case law is very big, reading the case law from the beginning may not be of much utility. So therefore first read the questions, then you can go and read the theory. When the shareholders demanded for increase in rate of dividend, but the shareholders cannot increase the rate of dividend, what the board of directors has recommended, some of them walked out of the meeting hall. What shall be the consequences of it? Okay, so here shareholders wants more dividend than declared by the directors. Shareholders are expecting more dividend than declared by the directors. So then what happens is the point. Look at this. I'll read the case law. Okay, Perfect Tires and Rubbers Limited is a listed entity engaged in the business of manufacturing of tires and tubes for light and heavy commercial vehicles. During the financial year 1920, the company has declared interim dividend of 5% on the equity shares in its board meeting held on 17th October 2019 out of the profits earned during the first quarter of financial year 1920. Further, the board of directors of the company, after reviewing results of the fourth quarter of 1920, again recommended for second interim dividend at the rate 5%. Okay, 2 times they have declared interim dividend. Okay, that's all related to interim dividend. So far as the interim dividend is concerned, remember the reason why I asked you to read the first question first means, so far as the shareholders are concerned, they are related only to the final dividend. They have nothing to do with the interim dividend. Directors can declare the interim dividend without any approval from the shareholders. So therefore, since they are talking about the shareholders, to answer the first MCQ, this above paragraph is completely relevant to me. This above paragraph is completely relevant to me. Just having a glance at that paragraph itself will come to some conclusion that whether it is relevant to answer the below questions. Absolutely no. Absolutely no. Because here we are talking about only interim dividend only. Interim dividend. Now look at this. So this paragraph is completely irrelevant. This paragraph is completely irrelevant. Right. So this paragraph is completely irrelevant. Next, the board of directors of the company approved the financial result, okay, for 1920. After approving the result, yes, they will recommend a final dividend, okay, at 5th August 2020, and recommended a final dividend of 15%, okay. Final dividend of 15%, including the interim dividends paid earlier. Interim dividends earlier above is 10%. Therefore, final dividend now will be the balance 5%. The general meeting of the shareholders was convened on 31st August 2020. The shareholders of this company demanded that since interim dividend was declared by the company, so final dividend should not be less than 20%, including the interim dividends. When the company secretary emphasized that final dividend cannot exceed what the board has recommended, some of the shareholders boycotted the meeting and moved out of the meeting hall in protest of the company's decision. So ultimately, what we have to talk about is that board of directors recommended a final dividend. Board of directors recommended a final dividend. Now the shareholders are expecting more dividend. Company secretary emphasized that final dividend cannot exceed what the board has recommended. Some of the shareholders have boycotted the meeting and moved out of the meeting hall. This is what the point. Okay, in protest of a company's decision. This is what has happened. Okay, board of directors recommended a final dividend and shareholders are expecting more dividend than recommended by the directors. Company secretary is denying that. No boss, it is not possible. You have to approve the dividend less than the rate recommended by the board, but not more than the rate. So shareholders does not like that decision, that argument of the company secretary. Therefore, they left the meeting. Sir, if some shareholders are left the meeting, whether meeting will become invalid? Absolutely no. If the remaining shareholders form part of the quorum, then whoever left the meeting, why you are bothering about? Let us check what is the remaining people. Whoever is still there in the meeting, if they are sufficient for the quorum, doesn't matter, irrespective of the people who left the meeting. Okay, look at this. Even after boycott, quorum is present at the time during the course of general meeting and they have approved with majority the rate recommended by the board shall be treated as approved. That's it, as simple as that. This is the correct answer. You don't need to read the remaining also. Even after boycott, if quorum is present, members present at the beginning of the meeting shall present all time during the general meeting. No, not necessary. Not necessary. All time during the meeting is not necessary. They should be present at the time of commencement of the discussions. They should be present at the time of commencement of the discussion. Need not present till the ending of the discussion. So if they left before starting the discussion on dividend, then you cannot continue. So at least they should be there. The quorum should be there at the time of commencement of discussion. They need not present throughout the meeting. Therefore, that is the wrong answer. The approval of the dividend is an ordinary business. So if some of the members have boycotted the meeting, it will have no effect even if the quorum is not present. No. Even for ordinary business also quorum is required. Whether it is an ordinary business or special business, what matters is the explanatory statement only. The voting procedure is same. Whether you are discussing ordinary business or special business, the voting procedure is same, the quorum requirements are same. What changes is only the explanatory statement. Therefore, C answer is also irrelevant. The recommendation of the board of directors related to the rate of dividend shall stands withdrawn. No, just because some people boycotted the meeting, you cannot say that the board recommendation is withdrawn. No, that is also false statement. So therefore, the only requirement is, the only correct option is the A point. Okay, even after boycott, if the quorum is present, then dividend will be declared. Next. What is the second question? At which date the unpaid dividend not claimed by the shareholders shall be transferred to separate bank account? Unpaid dividend account. Look at this. I'll show you how to calculate that. Before reading the facts of the case, first we'll see the provision. When to declare the unpaid dividend, etc. Okay, what is the time limit for declaring the unpaid dividend? So what we will do is that, look at this. So declaration of dividend. I think I have to, where is it? Okay. Right. So first we have to see this declaration of dividend. declaration of dividend. The provisions are same for both final dividend and interim dividend. Declaration of dividend. Next, deposit of dividend in a separate bank account. Deposit of dividend in separate bank account. Deposit of dividend in a separate bank account. Deposit of dividend in separate bank account. Next, what happens is that the next thing is due date for payment of dividend. Okay, payment of dividend. Payment of dividend. Payment of dividend. Next, transfer of unpaid dividend to transfer of unpaid dividend. Transfer of unpaid dividend. Transfer of unpaid dividend. So these are the points. Sir, now what is the time limits? Just look at this carefully. So declaration of dividend. Declaration of dividend to declaration of dividend to deposit of dividend. It is declaration of dividend to deposit of dividend. It is 5 days, maximum 5 days. It is maximum 5 days. It is maximum 5 days. And declaration of dividend to payment of dividend, maximum 30 days. Maximum 30 days. Next, from payment of dividend to transfer of unpaid dividend. Okay, so 7 days, maximum 7 days. Maximum 7 days. This is the time limit. Maximum 7 days. These are the time limits. So therefore, in the given question, we'll look at this. What is the date of declaration of dividend? What is the date of declaration of dividend? Okay. After approval of when the meeting has been held, when the AGM was held, the general meeting was held on 31st August 2020. Okay. So this is the first thing, 31st August 2020. Okay, so this is 31st August 2020. So what they are asking is transfer to unpaid dividend account. They are asking for the date. At which date unpaid dividend not claimed by the shareholder shall be transferred to a separate bank account. So from there, 31st August 2020 to 30 days. So that means that this will be 30th September. 30th September 2020. So from there 7 days, that means 7th October 2020. According to my guess, this is the 7th October 2020. Yes, latest by 7th October 2020. Within 7 days from the expiry of 30 days. Within 7 days from the expiry of 30 days. So this is how we have to understand the time limit. Declaration of dividend, deposit of dividend, payment of dividend and transfer to unpaid dividend account. Okay. So first we have to take the declaration of dividend rate, thereafter payment of dividend, from there 7 days transfer to unpaid dividend account. Okay. This D point is the option. Next, look at the third thing. The company transferred the amount of unpaid dividend amount to a separate bank account on 15th October. What is the due date? The due date is on 7th October. But the company has transferred on 15th October. How much has to pay? Company has to pay interest at the rate 12%. This is just a memory based question. It's just a memory based question. What is the rate of interest? It's a 12% rate of interest. Okay. In the given case, when and how much amount the company shall transfer the funds to the Investor Education Protection Fund. So the moment you see the fund called, the moment you see the word called as Investor Education and Protection Fund, you straight away go for the 7 years. That's it. 4, 5, 6 is completely relevant. After 7 years, that will go to the Investor Education and Protection Fund. So from there we have to take 7 years. From there we have to take 7 years and they transfer to IEPF account. You don't need to look at the date. You don't need to look at the just save the time of calculation. 7 years, that's it. Irrespective of the end date, 4 years, 5 years, 6 years is completely relevant. Okay, 7 years is the only point. You don't need to check out the amount also, because 7 years is the only option which has 7 years is only this point. If at all they have given 7 years here or here, then you have to calculate the amount also. So I think this is just you can by look at the shortcut directly 7 years. That's it. You don't need to look at the amount. Outrightly you can put that as an option. Okay, right. Now that is the point. Next, these are some more MCQs are there. Look at this. Amber Limited is a manufacturing of glassware. Its paid up share capital is divided into 20,000 shares of ₹100 each. The company is maintaining its register of members. Okay, the company wanted to close its members for declaring a dividend. It may do so by giving 7 days notice. It's also pure memory based question, no analytical thing. As per the act, it is 7 days notice. Dash interpretation seeks itself with what the law says. This is grammatical interpretation. Grammatical interpretation says just look at the English grammar. You don't need to bother about what is the government intention. What is the lawmaker intention? Grammatical interpretation says just stick on to the English grammar. You don't need to look at what would be the intention of the lawmaker. Whereas logical interpretation says we need not stick on to the words in the act. We have to go beyond that and identify the intention of the lawmaker. Therefore, logical interpretation is the second thing. Next, Arvind lends money to Mamata against the security of jewelry deposited by Mamata with Arvind. Arvind gave his jewelry to his friend Vinayak, who had a safe locker at his home. Who is the pawner in the given case? Borrower is the pawner. Who is the pawner? Borrower is the pawner. Arvind lends money to Mamata. So, Mamata is a pawner. Mamata is a pawner. Okay, right. Next, so borrower is a pawner. Pawner means the borrower. Okay, right. Next, look at this. So Raman, the original allotee of 2000 equity shares in ABC Limited, has transferred the same to Ruchi. The instrument of transfer dated 21st August duly stamped. So transfer instrument is 21st August. When they have to deliver it to the company? 60 days. 60 days means 2 months. August means September, October. That is 20th October. As simple as that. 60 days. So 60 days roughly you can calculate as a 2 months. So it is 21st August. Therefore 21st September and 21st October. So we will include 20 August, since August has 31 days. Since August has 31 days, it was coming to 20th October. You don't need to do the exact calculations also. Check out the month, 2 months. August to September 1 month, September to October 2 months. Okay, right. So previous lecture we have completed the 2 parts. One is amendments, another one is MCQs. So in this video we'll cover the questions, descriptive questions. Okay, look at this. Following are some of the securities issued by different companies related with each other as follows. K Limited. So listed non-convertible redeemable preference shares issued on private placement basis. So they have the power to appoint 2/3 of directors in I Limited, Indriyadam Limited. I Limited listed non-convertible securities issued on private placement basis in terms of relevant SEBI regulations, holding 60% voting power in S Private Limited. Yes, Private Limited listed non-convertible debt securities issued on private placement basis. The company holds 50% equity shares in P Limited as on investment on behalf of another company in a capacity of a trustee. Equity shares issued by K Limited and I Limited are not listed in any of the recognized stock exchanges. In the context of the aforesaid acts, answer the following questions. Whether the aforesaid companies can be considered as listed companies? No. As per the latest amendment, if the equity shares are not listed and only non-convertible redeemable preference shares and non-convertible debentures are listed on a stock exchange, issued on a private placement stock exchange, then it cannot be treated as a listed company. Okay, look at this. So we'll discuss those points now. Listed company. Okay, I'll show the types of companies, listing status, listing of securities and the status of the company. Okay, listing of companies. I'll explain the definition, amended definition. Listing of securities and the status of the company. Okay, equity shares. Okay, right. First point. Equity shares listed on recognized stock exchange in India. Okay, treated as a listed company. Okay, listed company. Irrespective of other features, the moment the equity shares are listed on recognized stock exchange in India, you no need to check, sir, what is the status of preference shares, what is the status of debentures, what is the status of non-convertible preference shares, what is the status of non-convertible debentures, public offer, private placement. You no need to check any other point. The very fact that your equity shares are listed on recognized stock exchange in India, irrespective of the other securities, non-convertible preference shares, convertible preference shares, non-convertible debentures, convertible debentures issued on public offer, issued through private placement, irrespective of anything with respect to those securities, it is a listed company. Equity shares are listed on recognized stock exchange in India. Okay, so equity shares are not listed in India. Equity shares are not listed in India. But non-convertible preference shares issued on private placement basis are listed on recognized stock exchange in India. Not a listed company. So not a listed company. Equity shares are not listed, then only have to check these points. No, sir, equity shares are not listed. Equity shares are not listed in India, but non-convertible debentures are listed in India. But non-convertible debentures issued on private placement basis are listed on recognized stock exchange in India. Then also not a listed company. Then also not a listed company. Okay. Then also not a listed company. Next, equity shares are listed outside India. Equity shares are listed outside India. Are not listed in India. Are not listed in India. But equity shares are listed, but equity shares are listed outside India. But equity shares are listed outside India, not a listed company, not a listed company. Okay, so this is the basic points in the definition. If the equity shares are listed in India, as a general rule, it is a listed company. If the equity shares are listed in India as a okay, if the equity shares are not listed in India but non-convertible preference shares issued on private placement basis are listed in India, then it is not a listed company. No sir, equity shares are not listed in India but non-convertible debentures are issued on private, then also it is not a listed company. Equity shares are not listed in India but equity shares are listed outside India. Equity shares are not listed in India but equity shares are listed outside India, then also not a listed company. Then also not a listed company. Okay, right. So these are the aspects we need to remember. Okay, equity share status. So here in the given case, listed here they have given K limited and I limited. They are not listed in any of the recognized stock exchange. Equity shares of K limited and I limited are not listed in any of the recognized stock exchanges. On the other hand, what they have listed is a non-convertible redeemable preference shares issued on private placement basis. Okay, non-convertible preferences issued on private placement basis. Non-convertible preferences issued on private placement basis. Here non-convertible debentures issued on private placement basis. Non-convertible debentures issued on private placement basis. So therefore, since equity shares are not listed in India, only non-convertible preferences and non-convertible debentures that also issued on private placement basis is listed in India, then it is not treated as a listed company. It is not treated as a listed company. Therefore, K limited is covered under this category and I limited is covered under this category. Accordingly, they are not treated as a listed company. Accordingly, they are not treated as a listed company. Next, so how about the S limited? S limited is also same thing, non-convertible debt securities issued on private placement basis. That means K limited is covered under the second category, I limited and S limited is covered under the third category. K limited is covered under the second category, I limited is covered under the third category. I and S limited is covered under the third category. Next, explain the relationship between the foresaid companies. So explain the relationship between the foresaid companies. Now we have to check whether they are holding and subsidiary company, whether there is any holding subsidiary relationship is there between those two companies, that we have to check. Whether any holding subsidiary relationship is there between those two companies, that we have to check. Look at this. Okay, right. So holding company, subsidiary company, control will be there. Okay, holding company will have control over the subsidiary company. Holding company will have control over the subsidiary company. Holding company will have control over the subsidiary company. Holding company will have control over the subsidiary company. So that control, type of control and mode of control. 2 points I'll say: type of control and mode of control. Type of control and mode of control. Holding company controls the subsidiary company. Holding company controls the subsidiary company. What type of control it is and what way that is controlled. What way that control is used. So type of control, 2 aspects. One is through composition of board of directors. Control through composition of board of directors. Next, voting power. Control through voting power. So control through composition of board of directors is what? Appointment or removing. Okay, appointing or removing all or majority of directors. Appointing or removing all or majority of directors. Appointing or removing all or majority of directors. Voting power, more than 50% of total voting power. 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 So mode of control, 3 different methods of control is there. So one is direct control, indirect control, partly direct and partly indirect. partly direct and partly indirect. Partly direct and partly indirect control. So these are the three different methods of control. Now if this is the point, now if you look at the question, K Limited is having power to appoint 2/3 directors in I Limited. K Limited is having power to appoint 2/3 directors. So here what we are looking at is a majority, but they are appointing 2/3 directors. Okay, they are appointing 2/3 directors. Since they are appointing 2/3 directors, it's covered under major category. So therefore, K Limited is a holding company of I Limited. I Limited is a subsidiary of K Limited because K Limited controls the composition of board of directors of I Limited. Okay, so what is the answer? What is the answer to that question? First question, holding and subsidiary company relationship. We need to write the holding and subsidiary company relationship. Holding and subsidiary company relationship. Holding and subsidiary company relationship. Okay, holding and subsidiary company relationship. Next, okay, I Limited, that's they have given Indriyana Limited. Indriyadam Limited is a whole subsidiary of Indriyadam I Limited is a subsidiary of this company, is a subsidiary of K Limited, is a subsidiary of K Limited, is a subsidiary of K Limited, is a subsidiary of K Limited because K Limited because K Limited controls the I Limited, because K India Limited controls the Indriyadam Limited by through composition of board of directors, through composition of board of directors, as it has power to appoint, two-third of the directors, which is more than the required majority of directors. Okay, right. So actually to become a holding company, we need to control the composition of board of directors. Controlling the composition of the board of directors means power to appoint majority of directors. But here they are appointing 2/3 of the directors, which is more than the majority. Okay, which is more than the majority of directors. So therefore, I Limited is a subsidiary of K Limited. Next, what is the second category? S Limited. S Limited is a subsidiary of I Limited because I Limited is holding 60% voting power, which is more than the required 50% of voting power. Is a subsidiary of S Limited is a subsidiary of I Limited. S Limited is a subsidiary of I Limited because I Limited controls the subsidiary, because I Limited controls the S Limited, because I Limited controls the S Limited through voting power. Okay, through voting power, as it has 60% voting power, which is more than the required majority voting power, which is more than the required majority voting power. Okay, right. This is what the S point. Next, P Limited. The company holds 52% shares in Patabo Limited. Okay, so P Limited is not a subsidiary of S Limited. P Limited is not a subsidiary of S Limited. P Limited is not a subsidiary of S Limited. P Limited is not a subsidiary of M Limited because the shares held in fiduciary capacity, because the shares held in fiduciary capacity are not considered for the purpose of determining holding and subsidiary relationship, for the purpose of determining holding and subsidiary relationship, for the purpose of subsidiary relationship. Next, fourth point. So one more point, relationship between S Limited is a subsidiary of S Limited is a subsidiary of K Limited. S Limited is a subsidiary of K Limited also. Is also a subsidiary of S Limited is also a subsidiary of K Limited because the control held by Indiana Limited is treated as is considered as indirect control, is considered as indirect control held by is considered as indirect control held by this company K Limited, is considered as a held company K Limited. Okay, this is what the point. These are the relationship between those four companies K, I, S and P. K, I, S and P. So this is the relationship between four companies. So first we have to check two types of control, that is composition through board of directors through voting power. Next, modes of control. Modes of control may be direct control, indirect control, partly direct and partly indirect control. Okay, right. Next, that's what this question. That's what this first question. Next, look at the second question. Abhiyogic Limited having see, let me check with the answers. This is the definition they have given. Finally, we'll check the answers. Shall not be considered as a listed company. Okay, shall not be considered as a listed company. All the three are not considered as a listed company. Okay. Next we have to link over the subsidiaries also. Okay, given that has the power, therefore understood that I Limited is a subsidiary of K Limited, that also we wrote. Okay, accordingly Saga Limited is a subsidiary of I Limited. This also our second point, correct. Next, this company is a subsidiary of respectively. Okay, is deemed to be subsidiary of K Limited, that also our fourth point. Therefore do not share any holding relationship. Accordingly, this P Limited cannot be treated as a subsidiary of S Limited. Okay, on behalf of because they are holding the shares in a fiduciary capacity. Okay, right. That is what the point. Our answers are correct. Next. Next, look at the second question. Abhiyogic Limited having 1000 members with paid up capital of rupees 1 crore decided to hold its AGM on 21st August 2022 and it received a notice on 2nd July 2022 from its 60 members holding paid up capital of 7 lakhs in aggregate for a resolution to be passed at the AGM for appointing Vedya and Company as its auditor from 2023 onwards instead of its existing auditor Chappal and Company, which was originally appointed for 5 years term and has completed its 4 years term. Okay, such a notice for resolution or forthwith sent by the company to Chappal and Company, which gave its representation in writing to the company along with a request for its notification to the members. But it was received too late by the company. In the context of aforesaid facts, please answer the following fact. Whether the said notice was given by adequate number of members within the prescribed time limit. So this is a special notice. Special notice has to be given by shareholders holding at least 1% of the capital. Special notice has to be given by shareholders holding at least 1% of the paid up share capital. So here paid up share capital is 1 crores. Out of that 1% means 1 lakh. They have given 7 lakhs. 7 lakhs worth. The persons who made a request are holding 7 lakhs worth shares. Therefore, it is a valid request. Because it is a 1%. What we want is a 1% capital. So 1 crore into 1%, 1% of 1 crore means 1 lakh, but they are holding 7 lakhs. Therefore, that is a valid request. We'll see the answer. Look at this answer. 1% of the total voting power or holding shares on which aggregate sum not exceeding 5 lakhs as may prescribed has been paid up. So in the given case, they have satisfied both the criteria. 1 crore into 1%, 1 lakh kada. They have satisfied both the criteria. So even in fact one criteria is sufficient, but anyway they have satisfied both the criteria. They are holding 1% of voting power, and also they are holding more than 5 lakhs paid up share capital, and also they are holding more than 5 lakhs paid up capital. Since they are satisfying both the conditions, yes, that request is valid. Yes, that request is valid. Next, what is the next question? Whether the company was bound to send to its members such representation made by Chappell and Company, and if it could not be sent in such a case, what was the responsibilities of the company? So if the retiring auditor has given any representation to the company, retiring auditor has given any representation to the company. Look at this. I'll show you these points. If the retiring auditor has given representation to the company, what is the options available with regard to the representations made by the retiring auditor? Okay, because you may get a different question in the exam, not exactly the same question. With slight modifications, you may get a different question. So therefore, I'll give you all the possible cases. Okay, representation made by retiring auditor, representation made by removing auditor, auditor who has been removed. A retiring auditor, representation made by auditor, a retiring auditor made by removed auditor. This was the removed auditor, right? Made by auditor, who represents is made by auditor. Representations made by outgoing auditor. I'll give outgoing auditor. Representations made by outgoing auditor. The first option is that company has to look at this point. The first option is, first point is, company has to send that representation to the shareholders along with the notice. Along with the notice, the company has to send representation to the shareholders. Along with the notice, okay. Next. Okay, at the retiring auditor, state the fact of representation, where any notice is given of a resolution appointing as auditor as a person other than a retiring auditor, and the retiring auditor makes with respect thereto representation in writing to the company not exceeding a reasonable length, and requests its notification to members of the company shall, unless the representation is received too late for it to do so, notice of the resolution given to the member shall state the fact of representation having been made, and send a copy of representation to every member of the company to whom the notice is sent. Okay, right. So first scenario, company has to send. Scenario 1, company has to send. Okay. Scenario 1, company has received the notice well in time. Okay, when due earlier. Scenario 1, company has received notice. Company has received notice in proper time. 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 So if the company has received notice in proper time, company has to send that notice. Company shall, in the notice given by the company to the members, so company has received representation in proper time. Representation in proper time. Okay, in the notice given by the, given by company to the shareholders, to the members, the company shall state a fact that the company shall state that retiring auditor, the outgoing auditor shall state that outgoing auditor has made a representation. Okay, has made a representation. Copy of the representation shall also be sent by the company. Shall also be sent by the company to every member to whom notice has been sent. Okay, copy of the representation shall also be sent by the company to every member to whom notice has been sent. This is first point. Okay, scenario 2, company has received too late. Okay, company has received too late. Okay, right. Okay, company representation is received by the company has received the representation too late. Scenario 2, company has received representation too late. Company has received representation too late. Okay, because it was received too late, or because the auditor may without prejudice his right to be heard orally require that representation shall be read out at a meeting, and such copy of, okay, company shall read out the representation, company shall read the representation at the meeting, company shall read the representation at the meeting. Okay, a copy of the representation shall be filed with the registrar. Okay. Copy of the representation shall be filed with the registrar. Shall be filed with the registrar. This is scenario 2. Okay, this is the second scenario. Do you understand? This is the second scenario. And now the third scenario comes is scenario 3. Scenario 3. So what this scenario says? Scenario 3. So in this third scenario, what happens is that company, whether companies receive the representation belated or earlier, that's a different issue. We keep it aside. But what is point is that, so the auditor has abused his rights. Okay, right. Look at this point. Rights, auditor is abusing his right to make a representation. Scenario 3. Okay, auditor is auditor, company feels that auditor has abused his rights. Company feels that, is of the opinion that, company is of the opinion that auditor is abusing his rights to make a representation. Auditor is abusing his right to make a representation. Auditor is making a abusing his right to make a representation. Company may apply to tribunal. Company may apply to tribunal if tribunal is satisfied with the company. If the tribunal is satisfied with the company's opinion, if the tribunal is satisfied with the company, then tribunal may pass an order. Company need not company need not send the representation to the members, and the representation need not be read out at the meeting. Company need not send representation to the members. Company need not read the representation. At the meeting. This is what the point. The company need not send the representation and need not read the representation. Okay, company need not read the representation. This is the point. Okay, company need not send the representation and company need not read the representation. This is the three scenarios. If the representation has been received in proper time, if the representation has been received too late, or if the company is of the opinion that auditor is abusing his rights. If the company is of the opinion that auditor is abusing his, what to do with the representations made by outgoing auditor? What to do with the representations made by outgoing auditor? Okay, right. So this is what the option. So therefore, in the given case, company can say that, so in the given case, the special notice is valid. Okay, right. Shall also made the representation read out at the meeting if so required by chapel, and shall also file such representation. In the given case, company is not able to send the representation to the members. In the given case, company is not able to send the representation to the members. Okay, right. But it was received too late, just 3 days before the meeting by the company. So representation was received too late by the company. So in that case, what the company can do? Company can read out the representation at the meeting, and company can file the representation with the registrar. Okay, company can read out the representation at the meeting, and company can shall file the representation with the ROC. Okay, this is what the point. It was received too late. So therefore, given scenario, given practical question is related to scenario 2. Therefore, first we have to identify what are the different possibilities. Thereafter, first if you understand the provision, what are the various situations covered in the provision, accordingly what is the situation given in the practical question, which provision has to be applied. So to the given practical question, this scenario 2 is applicable. Okay, right. Now that is the second question. And now look at the third question. Brinda Limited is a company manufacturing orange and strawberry candies for kids. Now the company wants to expand its business and start the manufacturing of 10 more types of candies. The company has raised 1 crore through the issue of non-convertible debentures, not constituting a charge on the assets of the company. Non-convertible debentures, unsecured, and listed on a recognized stock exchange. As per the applicable regulations made with the SEBI, advise whether the amount will be considered as a deposit. No. Since the debentures are listed debentures, that cannot be considered as a deposit. Non-convertible debentures, listed debentures, that cannot be considered as a deposit. If these three combinations, if this is satisfied, look at this, I'll show you why it is not treated as a deposit. If you look at the provision, any amount raised by issue of non-convertible debentures not constituting a charge on the assets of the company and listed on recognized stock exchange, all the three conditions has been satisfied. Type of debentures, non-convertible, unsecured, listed. So three conditions has been satisfied, therefore it is not a deposit. Okay, it is not a deposit. Non-convertible, first point, non-convertible debentures are there. Non-convertible debentures, non-convertible, next unsecured, listed, therefore not treated as exempted from deposit, excluded from deposit definition, excluded from deposit definition, not treated as a deposit. Not treated as a deposit, okay. Since all the three conditions has been satisfied, I think the question is very dead easy question, because they have straight away given what are all the 3 points required. They have given without any applying your mind. They have given the 3 points, all the required 3 points they have given. So first one is non-convertible, second one is unsecured, and one is listed. All the 3 conditions has been satisfied. Therefore it is not a deposit. If any one of the condition is not satisfied, then we have to look at different provisions. Since all the 3 conditions has been satisfied, it is outrightly exempted from the deposit purview. Okay. Next, look at the fourth question. The board of directors of Plum Limited proposes to issue a prospectus inviting offers from the public for subscribing to the equity shares of the company. State the reports which shall be included in the prospectus. It's one of the past examination questions. It's a repeated question. Straight theory question. State the reports which shall be included in the prospectus. So, reports and information specified by the SEBI under the SEBI regulations has to be disclosed, and we have to give a declaration. That all the provisions of the Companies Act has been complied with. So reports which shall be included in the prospectus. Okay, I'll write in brief what are the reports which shall be included in the prospectus. Reports information which shall be included in the prospectus. Reports which shall be, briefly I'll write, it's just a straight theory question, no analytical discussion. Okay, reports and information specified by SEBI, under SEBI regulations. Next, declaration relating to non-compliance, declaration relating to compliance with Companies Act 2013. Declaration relating to compliance with Companies Act 2013. Declaration statement that contents in the prospectus are not contrary to Securities Contract Regulation Act. 1956 and SEBI Act 1992. Okay, statement that contents the prospectus are not contrary to Securities Contract Regulation Act 92 or SEBI Act 1992. Okay, statement that a copy of the prospectus has been filed with the registrar. A statement that a copy of the prospectus has been filed with the registrar. A statement that expert has given the consent. And such consent has not been withdrawn. Before filing of prospectus with ROC. Before filing a copy of prospectus with the ROC. Next, names of the stock exchanges. In which the securities are proposed to be listed. In which the securities are proposed to be listed. listed. Names of the stock exchange in which the securities are proposed to be listed. Next, names and the underwriters and the rate of commission payable. Names of the underwriters and the rate of commission payable to them. And the rate of commission payable to them. Okay, so basically these are the contents or reports. Briefly I have given. It's a straight theory question. I no need to repeat the entire question. Just I have given the important points in that question. What are all to be included in the prospectus? As per the SEBI regulations, the prospectus will be very bulky. Minimum of 350 pages will be there. Prospectus will be minimum of 350 pages will be there. But I am not going to discuss all those points. Just whatever is there in the Companies Act 2013. Briefly, these are the contents to be given in the prospectus. Okay, right. Now look at the fifth question. One of the matters contained in the articles of Diman Foundation Incorporated a Limited Company under Section 8 was altered by passing a special resolution in the general meeting, and thereafter intimation for the same was given to the registrar of companies. However, such alteration in the articles was opposed by Dowager and Company, a partnership firm, which is its member, that there such alteration was not valid. As per the provisions of Companies Act 2013, whether the contention of Dowager and Company was valid and whether it can be a member in such company. Very important question. Look at this. Altered by passing a special resolution in general meeting, and thereafter intimation of the same was given to the ROC. So first of all, in case of a Section 8 company, whose consent has to be obtained? In case of Section 8 company, whose consent has to be obtained for what? Okay, various authorities involved in the Section 8 company. I'll show you various authorities involved in Section 8 company. Various authorities involved in Section 8 company. Okay. It is involved in relating to Section 8 company. Section 8 company. See, I'll show you. So first point, aspect, original authority, delegated authority. Authority to which the power is delegated. Okay, I'll write this: aspect, original authority, and the authority to which the power is delegated. Okay, aspect, or the authority to whom delegated, authority to whom power is delegated. Power is delegated. Authority to whom power is delegated. So first aspect, I'll write issue of license. Issue of license. Issue of license. Next. Issue of license. Next aspect is that alteration of objects. Relating to alteration of objects in connection with the we have to look at the connection. Alteration of objects in connection with the in case of alteration of in case of conversion of other companies. In alteration of memorandum in case of conversion of other companies. In case of conversion of other companies. Okay, alteration of MOA. Okay, alteration of MOA. Alteration of MOA in connection with the conversion to other companies. In connection with conversion to other kind of companies. In connection with conversion to other kind of companies. To other kind of companies. Next, next other alterations of MOA or AOA. Other alterations of MOA and AOA. Okay, MOA or AOA. MOA or AOA. Other alterations of MOA and AOA. Next, revocation of license. Revocation of license. Revocation of license. Okay, right. Revocation of license. So what is the original authority and what is the authority to whom the power is delegated? Original authority is central government. Original authority is central government. Power delegated to registrar of companies, ROC. Power delegated to registrar of companies. Power delegated to registrar of companies. Next, this is power delegated to regional director. Power delegated to regional director. Original authority is central government. Original authority is central government. Alteration of license, original authority is central government. Okay, whereas in this case, regional director, power has been delegated to regional director. Regional director. Okay, power has been delegated to regional director. In this case, central government. Original authority central government and power has been delegated to the registrar of companies. Next, another point, revocation of license. The central government may by order revoke the license. So same, central government, regional director. Okay, so this is the various authorities related to section 8 company. Originally the authority is this point for this issues. Originally this is the authority, and later on that authority has been delegated to various persons. Therefore this is very important question, maybe as a straight practical question like this, or you can expect a theory question also. That is the point. Next, okay, central government. Okay, this is the question. So now if you look at the question, so what they want to do is that they want to alter the special resolution general meeting. They want to one of the matters contained in the articles of the one foundation, articles of association, they want to alter it. So therefore since they are altering the articles of association, that comes under this category. So now the ROC power, you have to take the ROC approval also. That is the first thing. You have to take the ROC approval. We have to take the ROC approval for that. Okay, we have to take the ROC approval. It is necessary to take the approval of the registrar of companies. That's what point. Therefore first, if you understand the overall provision exactly, you can pick up where it exactly. If you read only that point, there is all chances that you may get the first row, second row, or the fourth row in the exam. Therefore first read the entire provision, then identify which part of the provision is applicable to the given case. So in the given case, what is applicable is the third row, other alterations of MOA, registrar of companies. That is what they have given. Next, whether a partnership firm can become a member of section 8 company, the answer is yes. A partnership firm can become a member of a section 8 company. Okay, right. A partnership firm can become a member of a section 8 company. That is what the point. Two questions are there. Next. Next, look at this. Mr. Abhi is a chartered accountant and MBA by profession. He has been appointed as an executive director on the board of XYZ Limited. His job profile includes advising the board of directors of the company on various compliance matters, strategies, business plans, and risk matters relating to the company. Keeping in view of the above position, whether Mr. Abhi can be classified as a promoter of XYZ Limited, please examine the same under the provisions of the Companies Act 2013. So he is a professional. So therefore his job includes advising the board of directors of the company on various compliance matters. So normally, as a general rule, any person who advises to the board, can be treated as a promoter. But here in the given case, he was advising to the board in his professional capacity. Therefore, he cannot be treated as a promoter, because there is an exception. Look at this. This is the general rule. A person who is advising or instructing the board is treated as a promoter. But what is the exception to that? This C point shall not apply to a person who is acting only in a professional capacity. This C point shall not apply to a person who is acting only in a professional capacity. So in the given case, profile is omitted to the board on various compliance matters, and that too in a professional capacity. His job is to advise the board in a professional capacity. Therefore, he will not be considered as a promoter. His job is to advise the board in a professional capacity. Therefore, he cannot be considered as a promoter. Okay, right. Next. Next, seventh question. Krish Limited created a charge on its assets on 2nd Feb 2021. However, the company did not register the charge with the Register of Companies till 15th March 2022. What procedure should the company follow to get the charge registered? So, what the procedure the company should follow to get the charge registered? So, registration of charge. First, we have to look at the time limits between creation of charge and registration of charge. Okay, creation of charge to registration of charge, creation of charge to registration of charge, up to 30 days. If it is up to 30 days, normal fees, up to 30 days normal fees. Sir, 31 to 60 days, normal fees plus additional fees, normal fees plus additional fees. Sir, 61 to 120 days, 61 to 120 days, ad valorem fees, normal fees plus ad valorem fees. Ad valorem fees you have to pay. Okay, ad valorem fees you have to pay. Okay, this is what the point. So therefore, in the given case, we have to identify 2nd February to till 15th March. So that means 2nd Feb to 2nd March, already 1 month is completed, more than 30 days. Therefore, in the second category, 7A point, you have to write this additional fees has to be paid. 7A point, you have to write the additional fees. And 7B point, not registering the charge on 27th May. So 27th May instead of 15th March. So 27th May means what? Already 2nd February to 27th May. Whether 6 months is complete, 60 days is completed. 60 days. No, in both the cases the procedure is same. 27th May. Sorry, 27th May. So not March, 27th May. So that means Feb 22 March, March 2nd, April 2nd and May 2nd. There itself 3 months is completed, 90 days. And 3 months and 22 days, 3 months and 25 days. 3 months, 25 days will cover under this category. 3 months, 20 days, 3 months, 25 days means 90 plus 25, 115. 115 days. Therefore, this procedure has to be complete. Normal fees plus additional fees. Okay. In the first category, additional fees. Second category, ad valorem fees. What is, sir, what is meant by ad valorem fees? Fees based on the value of the loan. Fees based on value of the loan. This ad valorem fees is fees based on value of the loan. 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 That is the this category. Okay, look at this. So therefore, in the first case, within the prescribed time, not filed within the prescribed time, to take the advantage of that, file through an application for not filing the registration of charges. So we have to make the additional fees. Okay, immediately file the after satisfying through an application that sufficient cause, satisfy that sufficient cause for not filing the particulars. For opportunity by giving further period of 60 days, but the company is required to pay ad valorem fees. Okay. It shall be noted that the period of 60 days has already expired from the date of creation of charge. Since the first 60 days from creation of charge has expired on 3rd April, Krish can still get the charge registered within a further period of 60 days after paying of ad valorem. The company is required to make an application. So this is the second category. We have to pay fees based on the value of the loan. First category, we have to simply pay the additional fees. Okay. Next. That is the 7th question. Next, 8th question. Vishal Limited has paid dividend consistently every year at the rate of 10% on its equity share capital in the last 5 years. Okay. The company has incurred losses in the current financial year. It still wants to declare a dividend for the current financial year 2021. Whether the company can do so? The answer is yes. Outright straight theory question. It's a straight theory question. Okay, so if the company is incurring losses during the previous years, in the current year company can declare dividend. In the current year company can declare dividend by using the previous year profits. Okay, has paid, the company has incurred loss, if still wants to declare the dividend, whether company can declare the dividend. So declaration of dividend, look at this point, declaration of dividend from previous year's profits. Declaration of dividend from previous year's profits. I'll write you. Here declaration of dividends from previous year profits. Declaration of dividend from previous year profits. Declaration of dividend from previous year profits. 3 scenarios are there. Here also we have to write 3 scenarios. Declaration of dividend using previous year profits. So scenario 1, previous year profits are lying in the profit and loss account itself. Previous year profits are lying in the profit and loss account itself. Okay, previous year profits are lying in the profit and loss account itself. Dividend can be declared in the current year using the previous year profits without any restrictions, without any additional conditions. Okay. Dividend can be declared in the current year. Using balance in the profit and loss account. Without any additional conditions, no need to comply any additional conditions, and no need to comply without any restrictions, So previous year profits are transferred to, previous year profits were lying in the Previous year profits were transferred to free reserves. Were transferred to free reserves. Were transferred to free reserves using the profit and loss account. Okay, by using the free reserves, using balance in the free reserves, using balance in the free reserves, using balance in the free reserves by complying with the subject to compliance with the subject to the below limits, subject to below limits, subject to below limits, subject to below limits. Sir, what are those limits, sir? Step 1. Okay, maximum rate of dividend. Maximum rate of dividend should not exceed the average rate of 3 previous years. Average rate of dividend in 3 previous years. In 3 previous years. Okay, maximum rate of dividend in 3 average previous years. Okay, next. Maximum 10% of the reserves can be withdrawn. Okay, maximum 10% can be amount to be withdrawn from the reserve should not exceed 10% of the aggregate of paid up share capital and free reserves. Okay, amount withdrawn from the dividend, amount to be withdrawn from the reserves, amount to be with only up to 10% of the paid up share capital plus free reserves can be utilized for payment, can be withdrawn from the reserves, amount withdrawn, balance amount of reserves after withdrawal, shall be at least 15% of paid up share capital. Shall be at least 15% of paid up share capital. Shall be at least 15% of paid up share capital. Okay, shall be at least 15% of paid up share capital. Next, amount withdrawn from the reserves. Amount withdrawn from the reserves shall be first utilized for set off of previous year losses and shall be first utilized for set off of losses incurred in the previous financial year. Shall be first utilized for set off of losses incurred in previous year. Losses incurred in the financial year. Losses incurred in the current year. Okay, right. So this is the point. Previous year profits were transferred to reserves. Previous year profits. Okay, previous year profits were transferred to other reserves. Previous year profits were transferred to other reserves. Dividend cannot be declared. Dividend cannot be declared using such other reserves. Okay, right. Such reserves cannot be used for a dividend. Okay, right. So this is what the point. This is how we have to understand which question is there. So in the given case, they have not given anything relating to the information of whether the previous year profits are lying in the profit and loss account, or whether they have transferred to free reserves, or whether they have transferred to other reserves. Assuming that they have transferred the previous year profits to free reserves, assuming that they have transferred the previous year profits to free reserves, we have to comply with the second column. Okay, right. I'll show you. Look at this. Incurred losses, and it wants to declare dividend. That's it. So they have not given any information relating to where the previous year profits are lying. They have not given any information relating to where the previous year profits are lying. So therefore, I can assume that they have transferred to free reserves. Therefore, accordingly, we have to follow this procedure. Next, that's all about the corporate law provisions. Next, look at the other laws. Surendra guarantees Virendra for the transactions to be done between Virendra and Jitendra during the month of March 2021. Virendra supplied goods of rupees 30,000 on 1st March and 20,000 on 3rd March to Jitendra. On 5th March, Surendra died in road accident. On 10th March, being ignorant of the death of Surendra, Virendra further supplied goods of rupees 40,000. On default in payment by Jitendra on due date, Virendra sued on legal heirs of Surendra for recovery of rupees 90,000. Describe whether legal heirs of Surendra are liable to pay rupees 90,000 under the provisions of the Indian Contract Act. What would be your answer if the estate of Surendra is worth rupees 45 only? Look at this. Liability of legal heirs in case of death of the surety. Okay, liability of legal heirs in case of the death of the surety. I'll write to the point. Liability of legal heirs in case of death of the surety. Okay. Liability of legal heirs in case of death of surety. Okay. The death of surety revokes the continuing guarantee from the date of the death of surety automatically revokes the continuing guarantee, revokes the continuing guarantee, but such revocation is effective, such revocation is it is immaterial, whether the creditor is aware of the death or not, aware of the death of surety or not. Okay, right. Surety, such revocation is effective from the date of death, from the date of death. Okay, from the date of death and not prior that. Okay. Legal heirs of surety are liable to transactions between, are liable for transactions between principal debtor transactions occurred before death, before the death of surety, before the death of surety, before surety's death, before the death of surety, before the death of surety. Okay, so surety are liable for transactions occurred before the death of surety, subject to the assets inherited, assets of surety, subject to the limit of surety's assets devolved on legal heirs. Okay, so in the given case, therefore in the given case, even though Surendra being ignorant of the Virendra, even though Virendra is ignorant of the death of Surendra, that means creditor is ignorant of the surety's death, in spite of that contract of guarantee will be revoked, so but when the death happened, supplied goods for 30,000 on 1st March and 20,000 on 3rd March. So before death occurred on 5th March, before death they have supplied 50,000 worth goods, before death they have supplied 50,000 worth goods. Okay, for this 40,000 they are not liable, even though creditor is not aware, they are not liable. So they are liable only for 50,000, and that 50,000 they are liable only for these transactions, up to what amount? Up to the worth inherited. So they are liable for, legal heirs are liable for which transactions and up to which amount is the question mark. Legal heirs are liable for which transactions and up to which amount? They are liable for these two transactions up to this amount of 45,000. Okay, right. Next, Negotiable Instruments Act. Anjum draw a check of rupees 20,000 payable to Bablu and delivered it to him. Bablu endorsed the check in favor of Rashni, but had kept it in his table drawer. Subsequently, Bablu died and check was found by Rahnesh in Bablu's table drawer. Rahnesh filed the suit for the recovery of check. Whether Rahnesh can recover the check under the provisions of an act? The answer is no, because the one of the essential element of check is delivery. One of the essential elements of check is delivery. So here Bablu endorsed the check in favor of Rahnesh, but not delivered. So therefore endorsement is completed. Endorsement will be completed only by delivery. In the given case, the check has not been delivered. Accordingly, no negotiation. Accordingly, R will not get any right on the check. Okay. Right. Next. General Class Act. Ayush and Vipul are good friends and pursuing CA course while doing group studies for the paper of corporate. They are confused about the provisions of section law of the Companies Act 2013. A company will be found for any lawful purpose by. Okay, so both Ayush and Vipul are in difficulty about the meaning of the word may, whether it should be taken as mandatory or directory. So even though the word may is used, but logically you have to apply that lawful purpose is not something which is optional for us. Lawful purpose is something which is what we call it, which is which is mandatory. Therefore, this may is a mandatory provision. This may is a mandatory provision, because logically you cannot say that government is giving two options to you: do lawful business, do unlawful business. You can't think that government will never give that kind of option. So therefore, may there means a mandatory, not optional. Normally may is optional, but in the given case, depends upon the context, we have to understand that may is mandatory, not optional. Next, when the preamble can be used to understand can be used as an aid to interpretation of statutes. Preamble is a part of the act. It can be used for understanding the act in case of vague or ambiguity. So if the main provision is vague or ambiguity, you can use the preamble. But if the main provision is clear, you cannot use the preamble. Preamble cannot override the main provisions of the act. If the main provisions are very clear and there is a conflict between the main provisions and the preamble, yes, we cannot use the preamble. If the main provision is very vague, then you can use the preamble as an aid to understand the act or to interpret the statute. Okay, right. So that is it. This is all with the RTP. Okay, all the best.